Okay, moving on, and let me welcome on board Aditya Arora, who is the founder and Multi Asset Research Analyst at Adlytick. And very good afternoon, Aditya, and thank you so much for your time to ET now. Coming for your first talk, you have picked up sale from the metal pack. We already saw a good move on JSW Steel post earnings. What exactly are you picking up on sale?
Shishti. So if you look at the metal pack, then it looks absolutely wonderful. So they say that all that glitters is not gold. Probably we'll say something similar for metals, steel and aluminium. Because if you look at the international chart of copper, then it's doing quite well. And the major tailwind for the metal sector is that dollar index has corrected from 105 levels to almost 100 levels. So SAIL has a very interesting chart. It looks quite bullish at 91. 85 should be the stop loss and 97 to 100 should be the target.
100 is a target that we're keeping an eye out on SAIL. But Lisa can't talk about United Spirits. When you look at the numbers, they were a good number that came in from the company. Revenues were ahead of the estimates. Profits were also ahead of the consensus. All in all, it was a good set of numbers, mainly aided by the low spends and a one-off. That is something that led to the significant improvement in the margins of the company as well. The prestige and above segment also grew by 21% in value terms, and the management says that the inflation concerns, yes, they continue to persist, but a sharp rise in IPL profits was something that was driven by the revenues of the new media right cycle, aided the one-off benefit as well, which the company saw. All in all, it was a strong quarter that came in from United Spirits. Today, it's up almost 6%. But that is on the numbers. Aditya, you too have picked out United Spirits. Are you expecting higher spirits for this one now?
Dowels is on very high spirits and the charts are actually portraying that. So the stock has broken out from a multi-week, multi-month breakout. The last high which we saw on the chart was in November 2021. So it's almost a multi-month breakout. There's a long way to go, and this could be bought even at the current levels because there are higher trajectory levels for the same counter. So stop loss should be 970 and the target should be 1100 and 1200.
Okay, moving on and switching focus to some of the other earnings, and definitely we can't get our eyes off Infosys because after a very shocking guidance that the company has cut for their FY24, the stock was actually down in trade today, has seen no substantial recovery from the day's lowest point. As of now, you will see that 8.5% cut is still you can spot on Infosys below that 1400 mark. The revenue guidance has been cut to 1.3 to 1 to 3.5% versus 4.7% that the company guided earlier, when the street consensus were 4 to 5%. So expect 3 to 5% of the downgrades that we have already seen coming in for their FY24. The EBITDA margin was actually sustained for the guidance of 20 to 22%. So the EBITDA guidance was actually maintained by the company, but the revenue guidance was slashed out, and that's why we are seeing Infosys because down in trade today, because on the numbers there was not that big a disappointment, but that was the guidance that is surely keeping the whole IT counter in pressure today.
Absolutely, and that nifty IT is among the losers coming in trade today as well. Those big names all are falling in trade. But Aditya, you picked out Infosys for us as well. Numbers didn't look exciting. We've seen that sluggishness coming in all these IT names just when they were trying to make that recovery, and again we're seeing a downfall there. What is it that one should look at in terms of Infosys? Is it a buy call? Is it a sell call? What's your view?
When you try to scare your younger cousin, you scare him or her for once, but that cousin doesn't get scared every time if you apply the same trick. So Street also has discounted all the bad results. Now Street knows that IT industry, at least the heavyweights, are not going to grow at the similar pace which they were growing at previously. So Street has completely taken that into account. There are disruptions taking place in the industry. But if you look at the chart patterns, then bad news is already in the price. So it looks good at 1326 and 1245 should be the stop loss, and target should be 1450 to 1500.
Okay. Aditya, you also have a take on JSW Steel. After the sharp spike, we are seeing the stock drifting lower. But what exactly on technicals are you looking at?
So JSW JSW Steel is a market leader and has one of the phenomenal chart patterns wherein you have seen good relative strength on the counter wherein the market was underperforming, but JSW Steel was doing quite well. So it's standing at a breakout point. So this stocks look bullish and it could be bought at 804 and 779 should be the stop loss and target should be 830 to 870.
Okay, keep an eye out on those levels, 830 to 870. That's the word from Aditya on JSW Steel. But let's move on and talk about
Metal name on your radar, that is Nalco. Tell us how the chart's looking like for this one.
So this is actually a smaller cap or mid cap wherein you see very high beta moves. If the sector has very positive outlook, then the best bang for the bucks is given by the small caps and mid caps. So National Aluminium is also looking quite good on the charts, although whole sector is looking good and everybody should keep metal stocks on their radar. So National Aluminium could be bought at 92 and 82 should be the stop loss and 102 to 112 should be the target.
Okay, let's move on and talk.
Surge post the earnings, that is Ashok Leyland from the auto pack, and a strong lead across the parameters is what we have seen. The margins have been maintained at a double digit, 10% is what the company has reported, and a push to the profit figure has come in from the deferred tax of 167.5 crores. Talking about the numbers, then on to the profit figure, we have seen an 8.5 jump. We were expecting a number close to 350 odd crores. 576 crores is what the company has reported, as well as the revenue has seen a jump of 13.5% on a YY basis. The EBITDA has also seen a good surge, and like I was mentioning, the EBITDA margin, which was actually 11% in Q4, has now come in at 10%, but the street was penciling it 8.5%, and the company also informs that they have gained the market share across the segment, and the truck market share has come in at 31.7%, but they have aspiration to take it to 35% in the next 3 years. So the commentary also looks quite good. The gross margin improvement from 26% last quarter to 24% this time around has been a thumbs up from the investors, and that's why you are seeing the stock still holding its gain in the green right now with the gains of 3%.
Absolutely, still holding on to that green. And Aditya, give us the technicals on Ashok Leyland today. Doing quite well, numbers are not bad as well. But on the charts, is it looking exciting in terms of going forward? Could we see the run-up that we've seen since April, May approximately, that continue for Ashok Leyland?
Absolutely, Vinny. Ashok Leyland has one of the very strong charts, and it is showing relative strength, wherein you are seeing a lot of other auto counters not doing so well, but Ashok Leyland has a breakout chart pattern. So it has potential to go till levels like 190 in the short term, and if we keep a longer term duration, then it has potential to reach to levels till 200 and 220. And stop loss should be 170.
Okay, surely keeping an eye out on that. But let's move on to the next one. And India market.
Radar after a 9% jump today. Are you expecting more upside in this one, and how much then?
This shows the exactly how contrasting the IT space is right now. On the one hand, you have ITC Infosys doing so poorly because of poor margins. On the other hand side, India Mart is doing so well, having robust numbers, and the chart patterns are also absolutely strong. So India Mart could be bought at 3170 and stop loss should be 2900 and the target should be 3300 to 3700.
Okay, keeping an eye out on those targets over there for India Mart as well. But
Fatafat, thank you Lisa, Harsh, Forum as well as Aditya for joining us today, and it's a goodbye from me and Winnie and the entire team who put the show together. But don't you go anywhere, because closing trades will take the action ahead.